Hello and welcome to Crypto Weeklies. In this video, we analyze Bitcoin Cash and its ticker BCH. None of the content is financial advice. This is the crypto portfolio analyzer. Analyzes the risk versus annualized volatility. This is available on my website cryptoweeklies.com. Link is on the bottom of your screen. This is under the portfolio builder section where analyzes which cryptos have since 2021 are in the gem zone, which have high return and low volatility, and which ones are in the danger zone. Fortunately, Bitcoin Cash since 2021, again, this is just purely data. The annualized return for BCH is at around 32%. Annualized volatility is 85%. Compared to most of the cryptos, it's still in a gem zone, along with other notable cryptos such as Bitcoin, BNB, Tron. Even ETH is on the boundary, XRP, Maker, and Link. So, where does it go from here in terms of the composite risk scoring using metrics such as alpha and Sartino ratio, that is risk adjusted returns, and then beta, volatility, max drawdown. You can see how all of these individual metrics normalize between 0 and 1 to get an overall risk profile of BCH. It's outside of the green zone, in the orange zones, at around 0.41 risk. For context, Bitcoin risk composite risk is 0.39, ETH risk is at 0.50. So closer to BTC than ETH in terms of composite risk. This is calculated using the metrics that mentioned earlier: alpha, beta, volatility, Sortino, and max drawdown. In terms of the gem hunter portfolio, Bitcoin Cash ranks at number 6 or 7 in terms of allocation, at roughly at around 4% of the overall crypto portfolio is recommended by this gem portfolio hunter. Again, gem hunter portfolio, which is market cap weighted of top 10 efficient assets in the crypto asset class that have more than 5 billion market cap, or did not have a 90% uh, plus drawdown, just and also heavily influenced by their current market cap. So this is an overall snapshot of Bitcoin Cash and its ticker BCH. If you were to go by the composite risk model, crypto composite risk model, for identifying what's the if the asset is in an accumulation phase, neutral, or distribution phase, the composite risk for BCH over here is at 1.35. That means it's right now the accumulation risk is higher than Bitcoin or ETH, or for that matter Sol or XRP, just lower than Tron over here. So that means it's in a neutral territory. Again, we'll do a deeper dive of why that is the case. Let's start with the individual charts pertaining to Bitcoin Cash, starting with the time weighted average price. The price is yet to fall below the blue line, which is the time weighted average price. This blue line is informed by how long the price has spent in terms of time spent, in terms of some of the average price, or time weighted average price, that is the time spent at some of the key levels influencing the time weighted average price. If the price is below the time weighted average price, typically it means that the asset is in an accumulation phase. If it is above the time weighted average price in the bear market, it means either the asset has yet to be bottomed, or is closer to be bottoming. So right now, in the last bear market of 2022, the time weighted average price was at around in the depths of the bear market was at around $500, whereas the price was less than $100. The time weighted average price versus the price difference was more than 80% or 81% at one point. So what I would be looking forward to in 2026, at least 35 to 50% difference between the price and the time weighted average price uh, would be needed. Again, would usher in a signal of accumulation, per my interpretation of the model, not financial advice. In terms of the regression based model, the regression risk is also not as low as it was back in April 2025 or in March 2023, where the risk levels were less than 0.1. Right now it's the second best time per the DCA model. The best time or the best accumulation range is whenever the risk is in this purple or plum shaded region. If we were to look at it even more closely, in terms of rather than looking at a daily interpretation of the time of the regression based fair value, what we can do is have a candle bodies and have residuals in terms of standard deviation to look at what is the overvaluation zone for Bitcoin Cash is at around 1080. The current price is somewhere in the week of February 9th, is currently coming in at the highs are at around 509, 570, lows are at around low 500s. So if we were to apply a lower one standard deviation residual, this green line, whenever the price goes, if and when the price goes close enough to the green line like it did in April 2025, or in the depths of the bear market lower than this green line, that's when accumulation makes some sort of a sense. Typically this time around, in February 2026, anything above, anything below $560 is considered undervaluation zone per this model. And if we were to go into a macro drop in the depths of the bear market, the lows for Bitcoin Cash could go as low as about $200. For context, right now the price of Bitcoin Cash, if we were to go over here, Bitcoin Cash is at around $560, and market cap is well above $11 billion. It's ranked number 10 by market cap of active cryptos, including stable coins. So that's where again the price could go in the bear market. In the bull market, following the bear market, the highs of Bitcoin Cash could go as high as about $1,000, which is roughly speaking 2x of the current price. All in all, again, the simple moving average price based drop also has not occurred yet. The price is not that far away from the 20-week simple moving average. Right now, the risk is at around 0.4. For context, the 20-week simple moving average, the blue line over here, is at around $560. Price is very close to that, or slightly above the 20-week simple moving average. What we need to see in 2026 is first a drop to 100-week, which is at around $460. That is $100 lower than the current price, and a 200-week, which is this red line over here, which is at around $318. It would be surprising that in 2026 the price does not come at least and test the 200-week simple moving average, um, or fall slightly below it in 2026 like it did back in mid 2022, or even for that matter even in the later half of the 2021 rally as well. And the price did come below the 200-week simple moving average for Bitcoin Cash in 2024 and in 2025 as well. So not much time the asset spends below the 200-week simple moving average. So for that context, uh, these are the indicators which, again, right now if we were to normalize only just based on what the moving average price based risk is for Bitcoin Cash is at around 0.42. For context, in July 2022, this had bottomed at around 0.4, sorry, less than 4% or less than 1% risk, when the uh, price was in essentially lower than the 200-week by significant amount of time, or significant amount of range between the price and the 200-week simple moving average at that point. So that's something to look forward to in 2026. In terms of the machine learning based price forecast, what could happen for Bitcoin Cash, again, if there is a downturn for 3 to 4 months, let's say from mid February, just timeline to be decided, to mid June, then the price could bottom in for this bear case scenario at around $260 for BCH. If there is a counter trend rally, the price could go as high for a couple of months at around between the current price of $650 to $850. That's the non-panic interpretation of the bear market scenarios. If there is 1 or 2 months of panic in that scenario, let's say a 1 month panic, then the price could bottom in 1 month at around 250, and then from that panic, again, the drop could take the overall 6 months downturn closer to that $200 range for Bitcoin Cash. All in all, if we were to look for any estimated bear market bottoms for Bitcoin Cash for accumulation analysis purposes, and then we can conclude on a hopeful note. The base bear case for Bitcoin Cash is roughly 53% drawdown from here at around $260. That's because the price is not below the time weighted average price. The time weighted average price risk is at around 0.92. It's quite elevated. The regression risk is low enough. The SMA risk is high. Weighted risk is at around 0.53. The panic case scenario in, let's say, a 2 standard deviation bear case or a panic at the end of the bear market could take the price action of BCH closer to that 200 level. And if we enter recession, a 70% drop could be on cards at around $172. The price could go as low as that. And from, let's say, $200, that median value, if we go by that median value and identify what could be a theoretical peak in the next bull run, take a median value of over here, a bull run peak, let's say a 2 standard deviation bull run peak in 2028 2029, time to be decided. In that scenario, price could peak per the same models, the regression model, the time weighted average price, and the SMA risk models for a bull case scenario at around $1,500. That's about a 7x if the price were to go to $200 before going back up to $1,500. With that, I would like to conclude. Hope you enjoyed the content, and check out all of these charts again on cryptoweeklies.com. Several several contents, not just related to Bitcoin Cash, but also overall market health related metrics. What's the overall state of the bull run or the state of the market cycle? Is it gone to the depths of the bear market lows? What is the overall risk meter analysis that we did for Bitcoin Cash over here? What is the methodology? How these indicators are calculated, not just for BCH, for major cryptos? Which cryptos are more undervalued than others at this point in time? Using this analysis, all of these indicators are available for free, no sign-ups required. So if you enjoy these content, please give a like and subscribe to help the channel grow. And hope to see you again tomorrow. Thank you and have a nice day.